Hello, cycle nerds. Welcome to the SaaS apocalypse we are in today. So, this session is dedicated to the software as a service sector in the asset category, and we need to analyze the current takedown of that whole sector in relation to data analysis and specifically cycle analysis. So that's why we are here the next 20 minutes, and this is what I would like to analyze with you today. So stay tuned.
From the mind of Lars von Tienen, the most advanced cycle analysis, hot off the press.
Thanks for joining today. So this episode, as I mentioned, is dedicated to a special theme which is currently out there. So we need to discuss how I would call it, that Wall Street is currently like playing roulette. All bets are on red. So all other bets are from the table. Just put it on the AI red bucket. And the black bet, which is now here for the software as a service, no one is betting on that anymore. So that seems to be the current case on Wall Street. I mean, it couldn't be more extreme like that. And that extreme, I mean, playing roulette on Wall Street with those two themes is something I will not get into that subject in terms of the news, the noise, the articles out there. You probably would have seen it all over the place anyhow within those headlines. Today, we need to look at the data, right? So what is about the data of that sector? And in specific, what do cycles maybe suggest looking at that data? So that's why we're here. That's why we're doing cycle analysis. We are live today. Thanks for joining. Thanks for your comment. I see your comments already rushing in. Thank you. Keep me motivated for the next 20 minutes. So I will monitor that. I like that. So before I jump into the analysis, for sure, I need to make all of you aware that we will be live on site in New York in May this year again. And we would like to invite you to join us in that conference we are hosting there. To gather all the experts on cycle analysis will be there. Do me a favor, go to cycles.org, check out the conference. It will be a great gathering with cycle experts from all over the world on 3 days, being really in person by person in New York, having great discussions on cycle analysis. So join us if you like. Now back to the topic. Software as a service. So what happened to that sector? I mean, just looking at the price chart of that industry, let's do that first. If you have not seen that, you should pay attention to the price chart of that sector, which I'm just showing here on the screen first before we use that data for cycle analysis. So the green price structure here is the so-called, how is it called? It's the ETF. It's the ETF of the software industry. So iShares Expanded Tech Software Sector ETF. Yeah. So this rebuilds all companies who are currently in the software as a service or software sector using the ETF as a price benchmark here. So this is what we are charting, and you can pull up that chart for sure on your own. Recommend it to get an idea. That's the green idea here, and you see we have tanked here to levels we have seen in 2024 and are on major lows here. So we've broken almost partially 50%, 40 to 50% from the high here. So what I have plotted below that, and that's now becoming interesting, especially if we apply cycle analysis in the moment. The blue line here is the ratio plotted to gold. So not in the US dollar. This is the ratio of the sector index priced in terms of gold. Yeah. And you see, I mean, for sure, it's even making a lower low. So in terms of gold, we are back at levels seen here 2016, right? So that's the true value of that industry priced in gold. So if we would take out all those US dollar driven currency topics, pricing assets in gold, like we would do with the Dow to gold ratio, to get an understanding if stocks are overvalued compared to normal commodities or levels, we can also price the software as a service sector priced in terms of gold, which is the blue data set here. So, and you see what a difference that makes. The all-time high we've seen here already in 2021, not in 2025. And since then, this sector dropped here from its peak to that point, I think 80% or even more. So pricing the software as a service sector in gold. So is this sector now dead? So should we all place our bets now on the AI hyperscalers and the software industry will go to zero? So what does this mean? So let's now use that price data, move that into our cycle scanner and see what the potential cycles could tell us on that page, right? So now let's switch over. To do that, if you are interested to repeat that analysis also in the analyzer on your own, you will find that data set right in the in our application. Yeah, so you can chart it right away with the iShares Expanded Tech Software sector. It's here included when you just open the platform. So this is what I've just done. And let's start with the weekly data series first. You know, I prefer to start with the long-term perspective first before jumping to other specific situations. So let's clean up the chart first. You see, I've already did some analysis here. So here we have the fresh chart, and let's even clean that up. So this is the price-based structure. Before getting back to the price, let's first analyze, or I mean, we could start with that first. So this is the normal perspective you would have looking at the price series. And as you know, looking now at the spectrum, here on the longer term part of the possible cycles, there is no clear guidance on which weekly cycles should be used, right? So there's the right shoulder of that peak here is not looking like it should look to be used here. Anyway, that's the only one from a longer time perspective we could use, but it's not a cycle which I would trust on its own. So let's start with that, even being very careful with that analysis. And by the way, that cycle should be familiar to every one of us using cycle analysis on the US stock markets for a longer time. It is the 180-week cycle. I mean, no surprise if you've seen past week's period, you know about that. That cycle, we know that peaked at late 2024, early 2025. This is the long-term cycle which has peaked here. And we now clearly see, in at least in the software sector, that cycle is pulling that really down. So we can't see that specific behavior in the other sectors right now, but it's coming down here, projecting a possible bottoming area here, maybe starting in May into that period. So it could give us some kind of indication that we are possibly arriving at a bottoming period in the next quarter. Yeah, so on a daily basis, not yet, not today, but within the next quarter from a long-term cycles perspective, even the long-term 180-week cycle could potentially become interesting. And even if this sector is stressed out too much to the negative side within the next 3 months, at least the long-term cycle, just looking on price on its own, seems to be, at least we should monitor that sector carefully for bottoming reasons. So that's the price. So now let's build the software as a service to, or software to a gold ratio, and let's check how the cycles look using that data sheet. So I'm just building the ratio calculation here directly in our application. I'm using the gold futures just to build the ratio. You can now see, instead of the raw price, we are now plotting this in terms of gold. You see also, and that's the interesting point why I'm also doing that kind of analysis, because what suddenly happens, if you have a look at the spectrum, cycles become much more clearer in regards to their separation in the spectrum. So, I mean, you can move back in the recorded video afterwards. I explained that the spectrum for the raw price series was not as perfect to really pick one or another cycle for projection. So now, switching to the same asset class, just priced in terms of gold, the perspective on cycles here at the bottom becomes much more clearer and more separated, yeah? And even we can isolate 2 long-term cycles, which really look more interesting. So that one is interesting here. The 172 gives a much clearer perspective. Looks similar to the nominal 180-week cycle we have seen. So, but becoming more specific, it looks more like it is on 172-week cycle, so to be more exact. And it seems to be, there is a shorter term rhythm of around 147, 150 weeks. And then to the longer side, there is nothing really useful to be seen. Yeah. So said that upfront, without looking what the cycles really tell us, the picture becomes much more clearer in regards to which cycles we potentially could pick. So that's also one benefit. Maybe plotting or charting the asset class in different terms of what you use as price. All right, so let's go to the cycles perspective here. Let's start with the 172 here, which is now shaping that even better. You see, we can also have a look here at the stability score first. And let's plot the stability score as an isolated perspective in the info box here. And let's have a full view of the stability of that cycle, which, if you are new to cycle analysis, you will see at the lower part of that plot here. So the red or magenta curve is the theoretically detected cycle with a length of 172 weeks, yeah, plotted as a static cycle. And the light blue data is the real price movement according to that length. Yeah, so the real cyclic behavior for the 172 weeks period. And if the real price behavior of that length, so from isolated from price, which is the blue information, overlays more or less perfect with a theoretical cycle, we have a very stable cycle over time. Yeah, so if the bottom timing and the top timing between the light blue and the red is in sync, we have a stable timing. And if the amplitude is in sync, we also have a stable strength of that cycle, which in that case is really true for the past 20 years. I mean, we will not be able to see it in this long-term plot. We should switch to logarithmic data and all that kind, but you see isolating just that price movement is becoming really fascinating, because, I mean, if we zoom in, yeah, you see here that bottom formed at that point of view. And if we go back here, we see also at least the bottoming period seems to align with that. So, or zooming in here, so the bottom, top, bottom, even in those periods where they are not so clear. I mean, that's not perfect, but then moving on, it looks like that the amplitude is really ramping up. So here, that low anchored to that point. Now we had the top here and some lows forming in that area here, and then another top here moving forward. So, I mean, not theoretically perfect in all terms, but I mean, cycles are never that perfect in this perspective. And getting back to where we are in that cycle, it's pretty clear. That cycle is even indicating, I mean, let's keep in mind priced in gold terms, yeah, so that we are even more closer to a bottoming than indicated by the raw price in the US dollar series. So priced in terms, it means we are even closer to a possible bottoming than the raw price. So let's also include the second cycle here, which was the 147, right? So that's the second ranked cycle, which could be valid from the spectrum. Let's have a first at this in an isolated way. So here we also have a high stability score, which means in regards to timing, that cycle is still valid over a longer period in time. So now, more closely looking at that cycle, it also is in alignment with the current pattern, a little bit more right translation. So according to that cycle, we should have already bottomed. I mean, no cycle is that exact in terms, but if we now stack up those cycles, which, by the way, gives an interesting shape even in the longer term picture. So zooming out a little bit, so these are now those two cycles as a superposition or a composite cycle plot, which show that those cycles more or less equal out each other or disable each other in the timing period between 2010 and 2015. And that's also the period when we had this more sideways consolidation, and cycles did not really play a huge factor. You also see that here in the cycle strength, the cycle goes more flat. So the blue line is not really a cyclic period anymore. It's more flat line. So the cycle was active before. Then we have that flat line, maybe due to two cycles disabling each other. And then even those cycles coming into play or synchronizing their phases again afterwards, and then even amplifying the tops and bottomers. So when cycles go in sync with their topping and bottoming timing, that will amplify the changes in trend in the raw data even more. Yeah, so that's why you can't see changes in trend, at least not in an extreme fashion, in the situation when those cycles do neutralize each other. Yeah, so a top in the one cycle might be a bottom in the other cycle, so there's no cyclic behavior to be seen. And then when they synchronize their top at the same point in time, then you see this amplification of those cycles, which is then also to be seen in the price series. Yeah, so that huge top we've seen here in 2021. So in terms of gold, the all-time high was the overlay of two active dominant cycles amplifying their tops at that point in time. So now it starts slightly to go out of sync even more, but we are still in a period, at least we see here in that timing, where those cycles at least seem to play a role until 2028. maybe 2029, until the next period will show up when those two cycles again neutralize each other again. So according, long story short, according to those cycles, we are currently at a possible bottoming window for this sector already. I mean, take this with a piece of salt, of course, yeah? I mean, this is a data analysis and it's priced in gold. So we cannot directly trade that perspective here. It just shows us. So remember, from the raw price data, the bottom is projected to be early summer, the next quarter. Price terms in gold, it seems like the cycles are bottoming right now. So, and that's where we use cycles for. It looks like we have a window of opportunity here, that the bets are overstretched on the one end, and really the table seems to be empty for the bets on the black software as a service section. So we should monitor that sector closely, not in terms because it will maybe go away and will not play a part in the future anymore. For whatever reason, the headlines might suggest that from a cyclic perspective, that sector is now primed for a comeback, right? So that's the cyclic perspective on the weekly perspective. And let's bring in some technical perspective also. Back to the charting. Let's take out the strength here, and now let's put in two indicators which could guide us here. So in terms of CRSI, we are overstretched to the downside for sure here, and the momentum is starting to create some divergence here between price and momentum. I mean, we are still in negative territory here, so I would like to see for the momentum to become positive or green, yeah, which means the momentum turns into the positive area, while we maybe might see a trigger here on the cyclic RSI. So never try to catch a falling knife. I mean, that's always to be taken into account. We need to see confirmation of that bottom now from the technical situation. So never try to trade time. You cannot trade time. Cycles give us just a perspective on time, but we cannot trade time. We just can trade price. And for price then, we need the technicals to confirm that possible window of opportunity. We might be close to that. That's why I explain the divergence, the momentum divergence is already in play. Momentum is not positive. And on the CRSI, I would like to see the confirmation crossing the lower band at that point in time. So as I said, it's now an interesting sector to monitor much closely, also from the technicals. Okay, let's now move to the daily perspective, right? So this was the weekly perspective. Let's do the same procedure. First, let's clean up all the mess. First, so we switch back now to the price chart, but instead of the weekly long-term perspective, we're looking now at the daily perspective. We have context in mind, so we have the longer-term perspective analyzed, the weekly on the price series and priced in terms of gold. So we have kind of what I call window of opportunity from the long-term perspective and where the technicals are currently and what we need to see. Here, by the way, that's quite interesting on the daily perspective. We have a pretty interesting cycle, which is isolated here with a high stability score, clear ranking in terms of the prominence and how the cycle looks like in the spectrum. It's clearly separated. The right and left shoulder looks nice. So that's an obvious one to take, but also not really surprising in that terms. We're talking about daily here, so don't confuse or see that cycle as a weekly cycle. The 190-day cycle seems to have structure here, or build structure over the past iterations, bringing this into this current bottoming situation here. Let me just open the chart again first. It was a little bit skewed. So we have it here again on the screen. Let's also add the technicals here, which is more or less similar situation as we've seen with the weekly. So the dailies are confirming. However, I would be very careful, as we've seen the weekly is still in negative momentum territory. There's no divergence showing up on the daily. So with said that, weekly still negative, daily, yeah, there is no divergence to be seen, which should kick in first at all major reversals. That's not the case yet. So even CRSI has strong downwards momentum here. So the daily does not really indicate from a technical perspective that a rebound is in the making. So again, never catch a falling knife price-wise, even though timing-wise it could show different here. So we need to wait for confirmation from the technicals. Let's do the same procedure now, pricing this in terms of gold, bringing in the ratio series again, charting this against gold. Here we have the different picture of the same sector. But it confirms a similar cycle here. So here we see the same cycle revealed independent from if we do chart it in US dollar or gold terms. So there's no really difference on the daily. What is interesting here, we see at first divergence coming up on momentum, yeah, right here. So price still going down while momentum is close to going positive here. Yeah, you see that here. And the CRSI seems to reverse. But as this is priced in terms of gold, I mean, you all are aware this could also due to a drop in gold, which then reverses that situation. So we need to understand how the ratio works and what could be the root cause and then the impact on the price chart. But that could indicate from a cyclic perspective we are due, or the timing window would be ideal. I mean, cycles, it never means it will happen now, a bottom. It could happen now. There's a high chance from a timing perspective that we see a bottom. But now we need to watch and trade price. Priced in terms of US gold, it is indicating now maybe a reversal is around the corner. It needs to continue. It needs to traverse onto the US dollar-based price chart. And we need to wait on the weekly confirmation, at least if we want not to go against the broader market, because the broader market maybe is due to a possible bottoming in this summer. And I think it makes no sense to trade the overall market structure. This is why we also need to have a close look what happens in the broader market context, the summer period. And now the software as a service sector is positioned for a rebound within the next quarter. So that's, I hope you see what the cycles tell us here. That's the story for today. So AI versus software as a service. I think AI is at high risk, overpriced. The bets are all placed on that end. However, software as a service is positioned for rebound. I mean, and now I'm going off cycles, just having some small talk here. Who should buy all the AI products if not software companies? I mean, that would not work out. And the huge domain knowledge you need to build software or even agents with AI on customer relationship management, on HR, on service management, ServiceNow, Salesforce, you name it. That domain knowledge is still required to wire all the large language models, the AI agents, into a real valuable AI agent, or however we call that in the future. So who, if not the software companies, should develop something with AI? I would doubt that the AI companies and the hyperscalers will develop that on their own. So there is a place for software companies. Maybe the pricing structure will change. There is a transformation in the pricing sector for sure. The seat-based pricing will not work anymore, but it does not mean that the software companies won't have a role in the future. Even the opposite. And price-wise, cycle-wise, we might have an opportunity here. If you are tired by that AI bet and maybe you want to start to replace your bets in this casino those days we have on Wall Street, maybe this is a possible perspective for you. So now let me go back to the live chat section. I see some of you have been active there, so let me now dedicate some time to your questions, and if not, feel free to rush them in. Yeah. Proper glass of water or a German beer is always nice. So I like that comment. Yeah. But back to the topic. So what kind of normalization method is used to compare a pure US dollar? Perhaps that could be given the natural tempos of those two things. Okay, so Edward, first, nice to see you here again. We aren't current talks on cycles for a long period. Edward, welcome to the live stream. I mean, for sure, the pre-processing of the whole data series is important before applying cycle analysis. I mean, it's more technical talk now. And what we are currently doing before we apply the cycle analysis is a detrending method. So not normalization as data normalization. We detrend that data, which is a kind of standardization, normalization, not in technical terms, but we pull the trend out of the data. So the cycles we've seen, and even those two cycles you reference for the US dollar, they are, or call them cycles in momentum. Those cycles do not account the underlying trend of that data series. So when you want to rebuild a possible projection with those cycles, you need to take back the trend in, which has been removed, and the cycles just give a momentum perspective on that data. So normalization is not done in that case. It is just pure detrending first. But I mean, Edward, you're right. Doing more with their data, so comparing different asset classes, there should be the normalization or standardization, at least if we go to machine learning techniques. But for that simplistic view of cycles, detrending is the key factor in data processing. But at least I don't see this as a critique. It's a very valid way which is required. But I don't want to get into too technical discussion. Also, that's a very technical topic, but I like that. So the metric on the faces seems to be a good proposal in terms of to identify the nominal phase change and then change in trend. So Luke, thanks for that proposal. And the Hilbert phase might be a way also to visualize that in the future. So I would just agree with your proposal. Let me see going forward. So I also will write that down. Maybe I can get something out of that in one of the next sessions. Thank you. Okay, so yeah, I mean, the reasoning for the move in the software sector is beyond data analysis. So we are here for what the data tells us, not about the media talk and reasoning why something happens in terms of economic or business decisions which might out here. I would leave that topic for other experts. But Edward, I put my 2 cents on the table some minutes ago on my perspective. So that's a discussion for a different series. I would confirm, but maybe it triggers, or what I would like to add to the story is a little bit how data confirms or even does not confirm the main media hype, or might also go against the main media hype in some terms. It does not mean that the cycles are right every time. Yeah, we are aware of that. So it just gives us an additional perspective, which from an analyst also taking data serious and maybe repetitive patterns in that data which are important, which cycles reveal. So that's what you always need to take into account if you're working as a professional in that business. So thank you for joining me today. I think that's what I have to say for today. Nothing more, nothing less. Again, thanks for your live comments. Do us a favor, continue the discussion, give us a like, subscribe to the channel if you have not yet. Join us in New York in May. Think about what cycles could help you moving forward in life, in financial markets, in other areas. So maybe that will inspire you starting the week. So have a safe week. See you next week again. Same time, same place. See you there.